Let's get right to the floor show because it is affecting markets, at least putting a cap on them. Joining me now, Interactive Brokers Chief Strategist Steve Sosnick and trader Keith Fitz-Gerald. Steve, which takes bigger precedent? I mean, there's green on the screen today, and that's certainly impressive, especially considering we had kind of a fumble yesterday, and it's not been too pretty the past couple of weeks.
Yeah, I think, there is a little bit of a relief rally here. We did get a bit oversold earlier this week, and so it's okay to see a little bit of a bounce. It's healthy to see a little bit of a bounce. But we did see a lot of risk sentiment come back in the market when we saw VIX rising, called from 13.5 to 19 in a very short period of time. We've come off a little bit there. It was nice to see us bouncing a little bit. The timing was such that it was right around 11:30, which kind of meant that when the Europeans went home, the U.S. traders will play. But markets don't move in straight lines, so it's good to see a little bit of backing and filling after this decline.
Well, what about that, Keith? Do you expect that this sort of negative September seasonality is going to seep through until October, or at least the first couple of weeks?
That's a tough call for reasons that Steve just mentioned. You got a lot of backfilling, you got a lot of give and take right now. But the thing that people don't focus on right now is A, that creates opportunity, and B, that's an exciting time if you're an investor or even a trader because you want to buy low, sell high, or you want to have a plan and stick to it. Chaos creates that.
Well, as you said, chaos creates opportunity. There isn't exactly chaos at Nvidia right now, but there is a headline we need to get to you all because it is just hitting the tape. Nvidia's French offices have been raided in a cloud computing competition inquiry. Of course, as we all know, Keith, Nvidia has been that leadership name in AI chip making, and it has, well, let me look at it. Yep, it is still at a $1 trillion market cap at the moment. Shares are actually still up about 1.33%. But these kinds of headlines, if they do end up creating some fear, volatility, jitteriness, is that the time to go in and scoop up some, at least on a vague discount?
Oh, yeah. I mean, there's no question in my mind, because if you look at this, right, government regulators the world over have been caught flat-footed by AI. They've been caught flat-footed by technology for decades. So a raid like this is nothing more than going after Microsoft, it's going after Activision, it's going after Google, Amazon, whatever. Big companies with great technology take that stuff in stride. That's not a problem in my book.
Steve, taking in stride is not exactly what's been happening this September because the volatility index has had a pretty decent move month to date. I believe it's in the red right now, but at least it was earlier. Yep, just down about, I want to say 4% today, but for the month, up 28%. Yep. How do you capitalize on that? How do you do what Keith just talked about, take chaos and turn it into a good opportunity? Well,
you have to think of it in terms of complacency versus chaos. I think right now, earlier this month, we were pricing in complacency, which was fascinating to me because the market wasn't complacent. It was sinking through, we haven't come up to our levels from July 31st ever since then. So we've been sinking steadily since, but the VIX was like mired at complacent levels. Then we got back to more normal levels, but that big jump to 19 only took us back to more historically normal levels. I'm using this as an opportunity to buy pullbacks in VIX right now. I think that's one of the things that I'm looking to buy because I think there's still more volatility reckoning to come. We've not yet found the bottom. Maybe we have today, but today doesn't feel like a major bottom. It feels like a bit of a trading blip. And I think until or unless we start to really feel that things have turned around, both in fixed income and in equities, I'm looking for opportunities to buy volatility in that situation.
I'm not so sure about fixed income. I mean, if you look at treasuries, at least, if you're talking about government debt, Keith, we are still at 17-year highs for the 10-year yield. Right now, the 2-year is at 5.079%, slightly lower than what it was yesterday. But these are still big deal yields. And you've got so many people out there shorting treasuries because they look at what the Fed said. Higher for longer when it comes to interest rates.
Well, I mean, that's the oldest trick in the book, how to screw up financial markets, higher rates ahead. Now, the Fed is dead set on doing that, and, they can't seem to learn from experience.
Okay, so don't fight the Fed.
They're not getting the results.
Profit.
I'm sorry?
Don't fight the Fed. If they are going to do what they're going to do, profit from it, right?
Well, exactly. This is the thing. It's the oldest rule in the book. You don't fight the Fed. Whether you agree with it or not is moot. One of the ways I'm doing that right now is going after companies like Chevron, for example. Lower by, we know the Fed's going to introduce more spending. We know the government's going to have more spending, higher rates. Oil's a great way to play that. I love the stock, great dividend, good stability. It gives me the offset I need to go after tech aggressively.
Steve, nobody got poor taking profits off the table.
Yep. That's really one of the adages that every trader lives by, right?
So would you sell when you see a rebound like today?
It depends where you think the trend is. If you believe that the trend has turned meaningfully lower in equities, well, then you have to switch from buy low, sell high to sell high, buy low. So that's when you do take profits, and then you hope to come in at a lower valuation. I think right now, the medium term trend is pointing lower, and so that I think is a reasonably decent tactic of taking profits when you can get them and looking for better entry points. If and when the trend turns back up, of course, then you want to be looking for buying opportunities rather than selling opportunities.
Buy low, sell high, and then sell high, buy low.
Rinse, repeat.
My dad, a doctor, notoriously bad investors, doctors would say, kids, buying low and selling high on Kodak put you through college. Steve Sosnick, Keith Fitz-Gerald, my thanks to you both.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.